Good afternoon, boys and girls. Welcome to the Liberty Call for Thursday, May 26th, 2022. I hope everybody's having a great day out there. It's pretty nice here in Colorado. It's finally warmed back up, 75 degrees outside. I still have long sleeves on because it was kind of chilly this morning. So, anyways, like I said, hope everybody's having a great day out there in the interwebs. And if it's your first time watching, give me a few of these thumbs up, a like, a share, subscribe, all that good stuff. I would certainly appreciate it. My boy Jake over my shoulder, he would appreciate it too, because the more business I have, it's more dog treats for him and balls and playtime and get to go outside and goof around. Anyways, all right. Well, pretty good day in the markets. I think we've had 4 or 5 consecutive days of an uptrend, which I wouldn't get too excited. Remember those dead cat bounces we've talked about over and over again? Do not get too excited about one day or one week. Does not make the market. Does not affect the longer term trends. Until those change, I wouldn't get too excited. All right, well, let's go ahead and jump in and see how the markets did today. The Dow Jones was up 1.61, closed at 32,637. SP 500 was up 1.99, closed at 40.57. NASDAQ was up 2.68, closed at 11,740. Small caps are up almost 2.5%. The VIX was down 3.07% today, closed at 2750. Moving over to the other exchanges in the Americas, Canada was up 0.73, Brazil up 1.19, Mexico was down slightly at down 0.2. Moving over to Western Europe, Germany was up 1.59, France up 0.56. I'm sorry, that was not France. That was the UK up 0.56, France up 1.78. Euro stocks up 2.54, Netherlands up 1.27, Spain up 1.47, Italy up 1.22, Switzerland was flat. It finished up 0.07, Portugal up 1.95, Belgium was flat, up 0.09. Let's see here. Austria up 0.27, Sweden was down 0.96, Denmark up 0.2. The Russian exchanges were mixed again today. The MOEX up 3.11, the RTSI down 5.19%. Wow. All right, let's move on down to the Asian markets. Japan was down 0.27, Australia was down 0.69, New Zealand down 0.73. Chinese markets look mixed. The Shanghai was up 0.5, the SESE component up 0.57, China 850 was down 0.21. The DJ Shanghai was up 0.48, and the Hang Seng down 0.27, and the Taiwan weighted was down 0.84. So it looks like the Asian markets were kind of mixed to down overnight, and the European markets were booming up 1.5%, 2%, 2.5%, much like we had here in the US. So all in all, for the day, looked pretty good. So, but again, for those who are paying attention and playing along, don't get too excited. It's just the way it is in the markets. One good day. I mean, I went through this back in 2007 or 2008 and 9 when things got so rough. You look for those good days. Say, all right, it's better now. And knowing what I know now and having a decade and a half under my belt, it certainly I have a different opinion of how to analyze and evaluate what's really going on in the bigger picture. All right, let's go ahead and read through today's market recap. SP rallies as tech retailers flex muscles. It's written by our friend Yassine Ibrahim from Investing. The SP 500 climbed Thursday as stronger than expected quarterly results from retailers and a rally in tech put stocks on course to snap a 7-week losing streak. Retailers, victim to a wave of selling pressure recently, were back in vogue as strong results from Macy's and Dollar Tree eased worries about the strength of the consumer. Boy, those are two totally different retailers. Dollar Tree and Macy's. Granted, Macy's isn't the highest end of high end, but they're typically not cheap. Macy's raised its outlook on profit after reporting better than expected first quarter. Supported by price hikes and amid strong demand, its shares rose more than 18%. Dollar Tree surged more than 21% after reporting quarterly results that beat both the top and bottom lines, as the discount retailer's recent move to raise prices to $1.25 boosted margin and growth. So they're no longer the Dollar Tree. They're the dollar and a quarter tree. Shame, shame, shame. Reopening stocks, including Norwegian Cruise Lines and Caesars Entertainment, also played a role in pushing the broader market higher as investors bet on strong travel demand in the summer months ahead. Tech, meanwhile, racked up gains with big tech in ascendancy as expectations for a Fed pause on rate hikes later this year was boosted by data showing an unexpected decline in first quarter economic growth. Facebook led the gains up more than 4%, followed by Apple, Alphabet, and Microsoft. Chip stocks were also supported the bid in tech, driven by a rally in Nvidia and Broadcom. Nvidia reported better than expected first quarter results, but guidance fell short of analyst estimates. Some analysts, however, aren't convinced that it's time to dip into the chip maker amid concerns about valuation. Quote, Nvidia is arguably attractively valued at current levels, but until there's more evidence that indeed this quarter marks a trough for gaming revenues, we believe investors will continue to struggle with Nvidia's valuation, end quote, Wedbush said. Broadcom was up more than 2% after announcing it would acquire VMware in a $61 billion deal. Twitter, meanwhile, gained more than 5% on fresh hopes that Tesla chief executive Elon Musk will proceed with his deal to take the social media company private after the Tesla CEO increased his commitment in the deal to $33.35 billion. All right. Well, so some good news coming out of the tech industry. Again, I don't know if it's going to be long lived, but we'll see. All right. Next article here. Oil jumps most in 2 weeks in pre-Memorial Day run. After a choppy trade, crude prices jumped more than 3% on Thursday. They're most in 2 weeks, as longs in the market bet on runaway fuel consumption ahead of Monday's Memorial Day holiday that will flag off America's peak driving season. Some 39 million Americans are expected to hit the road from Friday ahead of the holiday, even as record high fuel prices were likely to prompt fewer trips and shorter distances traveled this year, the American Automobile Association said. Who said automobile? That was Long Duck Dong from 16 Candles. Play along or stay. Keep up, folks. New York traded WTI crude for July delivery settled up $3.76 or 3.4% at 114.09 a barrel. It was WTI's biggest one-day run-up since May 13th when it surged 4%. In 4 sessions prior to Thursday, the U.S. crude benchmark had seen choppy trade that resulted in a net loss of 1.7%. London traded Brent crude for August delivery settled at 114.17 a barrel, up $3.05 or 2.7%. Quote, the latest round of U.S. data suggests the economy is decelerating, but the consumer is still spending and probably will be traveling a lot this summer, end quote, said Ed Moya, an analyst at online trading platform Owanda. Data from Wednesday showing sharper than expected declines in U.S. crude and gasoline stockpiles helped put a floor beneath crude prices that slid as much as $2 a barrel in intraday trade over the past week. U.S. oil processing reached 93.2% of capacity last week, its highest since December of 2019, as refiners maxed out fuel products to meet projected demand, which has sent gasoline to record highs above $4.50 a gallon and diesel to all-time highs above $6. I drive a diesel truck. That does not make me happy. Longs in oil market also pounced on remarks by German economist minister Robert Habeck that the EU can still strike a deal on an oil embargo in the coming days or look to, quote, other instruments if no agreement is reached. This was despite Hungary remaining a stumbling block to the unanimous support needed for EU sanctions. Budapest is pressing for about 750 million euros to upgrade its refineries and expand a pipeline from Croatia to enable its switch away from Russian oil. China's premier Li Keqiang, meanwhile, delivered a downbeat outlook on Thursday about the new struggles with COVID faced by the world's largest oil importer. The China factor could weigh on sentiment in the coming week, analysts said. So, yeah, oil prices are, again, I don't see them receding anytime soon. I mean, part of this has to do with the amount of inflation that we've seen. It just makes everything get more expensive across the board. But, then you have the factor of cutting off Russian supply to, the rest of the world, except for India and China. And we're just going to continue to see this. And I do find it funny that the EU is still trying to ban Russian oil. I mean, this thing's going to be over before they ever get to some sort of a total agreement across all those nations. So I just don't see it happening. I think we're doing more damage to ourselves than than anything in the long run. All right, some updated numbers from the uh, economic indicators. U.S. first quarter GDP revised down slightly, but initial jobless claims fell last week. So it's kind of a mixed bag in this article written by Jeffrey Smith from Investing. U.S. economy shrunk by slightly more than initially estimated in the first quarter of the year, according to fresh data released on Thursday. GDP contracted at an annualized pace of 1.5% rather than the 1.4 preliminary reading. The Bureau of Economic Analysis said the gloomy revision was offset by a small positive surprise on more timely data on jobless claims. The number of people making initial claims for jobless benefits fell to 210,000 from 218,000 the previous week. Analysts had expected 215,000. The number of those making continuing claims rose by just over 30,000, however, to 1.346 million. Jobless claims numbers showed little sign of the current labor market tightness unwinding in the near future, despite a slew of corporate updates suggesting that more and more companies are looking to restore profit margins by cutting costs, including payroll or labor costs. Yeah, see all these people. I remember, I guess it was probably a year and a half ago when inflation was just starting to really nip at our heels. And there was I think a CNBC article that said, inflation is good because, wages are going up. Well, if inflation is higher than, in the end, if inflation is higher than the wage gains that you got, you're still further behind than what you thought. So the fall in GDP was largely the result of net trade reflecting in imports during the quarter and by inventory destocking, with vehicle segments particularly badly affected by renewed supply chain problems. However, final sales to domestic purchasers, which exclude such factors, still grew at an annualized rate of 2.7%, suggesting that the consumer demand was still robust. The BEA also gave a reminder of the increasing price pressures felt across the country. Energy prices increased 42.5%, while food prices increased 11.2%. Excluding food and energy, prices increased 6.7%. Two things no one ever uses food or energy. I mean, that's just crazy. Accelerating from a rise of 6.2% in the final quarter of 2021. Oxford economists, lead U.S. economist Lydia Busauer said the figures kept the Federal Reserve on track for a half-point rise in the Fed funds rate range at both of its next two meetings. Quote, while we still expect the Fed to steer the economy toward a soft landing, downside risks of the economy and the probability of recession are increasing, Basur said in a note to clients. Quote, a more aggressive pace of Fed rate hikes, a tightening in the financial conditions, the ongoing war in Ukraine, and China's zero COVID strategy increase the risk of a hard landing in 2023. Yeah, remember that? Beard sticking out. Remember when I showed those videos of plane crashes? That's what it's going to look like. I don't think there's a way of getting out of this, folks. You can hope and pray, but I don't think it's going to do much. All right. Next article here. Fed may pause policy tightening in September, Bank of America says. See, well, and let me stop here before I even get into this. The folks in the banking and the financial industry despise high interest rates because, what that does is it pushes down on valuations. And, in the financial industry, that's how they make their money. They make money on AUM, or assets under management. So if by raising interest rates, it puts downward pressure on stock prices, say they go down, I don't know, 10%. That's 10% less revenue that the big bankers are going to make. So I hate to sound jaded, even though I work in this industry, but you're going to see a lot of articles like this. Well, and I've covered a lot of them already over the last couple of months where, oh, well, we really don't need to raise rates a lot, just a little bit here or there. And, they're always trying to downplay it or poo-poo it when in reality, like the article I covered yesterday, raise rates like crazy until you get this under control. To me, that's I mean, let's say you have a terrible infection in your body. You got I don't know what's the one you catch at the hospital. Shit, shoot, I forget. Anyways, it's say you have a terrible infection, and do you just want a little bit of antibiotics, or do you want a full course that's actually going to knock it out? All right. The Federal Reserve could pause its monetary policy tightening in September if there's an economic deterioration and inflation subsides. Yeah. Okay. BofA strategist said on Thursday, a day after the central bank released the minutes from its May policy meeting. All of the Fed's policymakers agreed to hike interest rates by half a percentage point at the May 3-4 policy meeting to counter rampant inflation. And most participants said further hikes of that magnitude in June and July could be appropriate. But the meetings also showed the Fed grappling with how best to reduce inflation without causing a recession and pushing the unemployment rate substantially higher, a task that several participants said would prove challenging. The central bank would like to pause its tightening in September, leaving its benchmark overnight interest rate in the range of 1.75 to 2%. If financial conditions worsen, Bank of America's strategist said in a note, quote, "We have recently seen tenuous but remarkable change in the Fed communications, where some Fed officials suggest the option of downshifting or pausing later in the year as they reach 2%, given the challenging macro backdrop, tightening of financial conditions, and potentially softening inflation," end quote, they said. Well, first, inflation needs to soften before you start getting ahead of yourself. Inflation by the Fed's preferred measure is currently running at more than 3 times the central bank's 2% target. The Fed's funds futures traders on Thursday were pricing in a 50 basis point rate hike at each of the central bank's June and July meetings and another 25 basis points hike in September, while noting it was not its base I'm sorry. While noting that it was not its base case scenario, Bank of America said the central bank may see a federal funds rate at 1.75 to 2% as providing a quote normalization of policy, which then offers an opportunity to pause and assess the impact on global jobs and inflation. I'm sorry, on jobs and inflation. Where'd global come from? A pause in tightening could lead to lower rates across the U.S. Treasury yield curve, the strategist said. The benchmark 10-year U.S. government bond yield hit its lowest level since April on Thursday. It had fallen from 3.2% on May 9th as the bond market sees the economy slowing and expects inflation to lose momentum. Other analysts, however, do not see the Fed as having shifted to a more dovish stance. Strategists at TD Securities said they expect the central bank to hike rates above the neutral rate, the level which neither stimulates nor constricts economic growth, but at a more gradual pace. After the June and July policy meetings, Fed policymakers estimate the neutral rate to be roughly between 2 and 3%. Quote, "The views expressed in the minutes are about all they could say at the start of an aggressive tightening cycle where no one really knows how far rates have to go," end quote. Investment bank Brown Brothers Harriman said in a note. Yeah, Brown Brothers Harriman. Woo, if you knew the history of that company, you wouldn't want anything to do with them. Quote, "The Fed is facing a very complicated situation and so is trying to burnish its hawkish credentials while trying not to pre-commit to any rate path," it said, end quote. All right. So again, uh, the people in, I guess, like I said, in the banking business do not like this. This is going to hurt their margins. And unfortunately, sometimes you got to take the nasty taste of medicine to get through the pain. All right, last thing I got here. It's a slideshow: 14 best public colleges, Princeton from Princeton Review, their 2022 Princeton Review, written by Michael Fisher. Probably not the one I know. All right, number 14, Silo Tech, Texas A&M University in College Station. So it doesn't really give a lot of details. I mean, there's a little bit of an article here, just talks about, and I think you can click and read the actual review if you want. So number 14 is Aggieland. Number 13, TU. That's what I think of TU right there. Both good schools. I have friends who went to both of them. I don't have anything against it. UT is probably worse. It's more of a cult. But I got a number of friends who went through that institution. University of California, Davis. is coming in at number 12. Number 11, University of Florida. Ugh, spent 10 years living in Florida. Can't stand the Gators. Granted, I look at most of these colleges through their athletic, through their athletic programs, not necessarily, what the curriculum is there. All right. Next, number 10, William and Mary. Number 9, University of Michigan, Ann Arbor. City University of New York, Baruch College. Number 7, UNC Chapel Hill. Pretty good school. Well, good basketball team. Love their basketball team. UC Davis, or I'm sorry, UC San Diego. San Diego's a lovely town. Spent 2.5 months there in boot camp. Didn't really get to see much of it because I was trapped inside the gate. University of California, Santa Barbara, the Banana Slugs. Another, one of those schools that crops up in the NCAA tournament occasionally. UCLA, big school, good school, from what I understand. University of Virginia, number 2, Georgia Tech, the Yellow Jackets, bad football team. And last but not least, UC Berkeley, the Bears. So, they from time to time they have a good sports team. So, all right. So, like I said, this is the list from the Princeton Review. It'll be linked in the show notes if you want to read through it at your leisure. You probably read through all the details. Personally, I wouldn't send my kid off to any college at this time, unless they're going to be a doctor or an engineer. Those are really the only times I would suggest anyone going to the university system, because the academy has just become so woke, and you really don't want your kid coming home with blue hair and a nose ring and change their gender. It's just not ideal. I mean, what I would recommend is learn a trade. If your kid's really bright and a really good problem solver, sit them down in front of a computer, learn how to code. I mean, there's a lot of other avenues out there. Learn a trade. Trades pay really well. I mean, I just had a new hot water system and boiler system put into my house, and that cost over 40 grand. So it's going. There's no shame in being a plumber or a mechanic. I mean, those jobs pay well, and the more advanced the technology gets, it's only going to fatten their bottom lines. So. All right. Well, that's everything I had for today. If anyone needs anything from me, go to dsafinancialgroup.com. All my information is there. And I hope everyone has a fantastic evening. Be back tomorrow with the weekly wrap up. And it's an off day for the Astros, so I guess I'll just be watching the other the other dozen games that'll probably be on today. That's the beauty of having the extra innings package through DirecTV. It's not. I'm not advertising for that. I have it. Might as well watch it. Astros can't play every day, and even when they're not on, I'll watch the other games, which is really, really nice. All right. Well, everyone have a great night, and I'll see you tomorrow.